Welcome to ShortView Trading. This is your morning market hit for Wednesday, 27th of January. What matters today for traders? Well, we've had strong gains in equity markets over recent months, many indices making new highs. Momentum's really been quite strong to the upside since the October low. And you can see that in many asset prices. The S&P, for example, is up almost 18% from that October low. And with that, of course, the US dollar's been weak. Commodities have been quite strong if you look at base metals and energy in particular. So the key question is then, is there another leg higher, or are markets now starting to top out? That's the question we address in our daily RAG trading publication, available on our website and to subscribers. In that publication, we make a 1 to 2 week trading recommendation for US equity markets, guided by the signals we get from our short-term models. At the moment, the key question we're thinking about is what's next? What's the next big move? And in that sense, it's interesting to see some cracks emerging in parts of the global financial landscape, especially in asset prices where there's been a build-up of froth and excess, some quite parabolic moves in certain asset prices in recent weeks and indeed months. If we look over to Asia, for example, momentum's beginning to stall in certain indices. If you look at the Vietnamese equity market, after quite a parabolic move higher, it's starting to roll. The Hang Seng Index in Hong Kong has followed a similar shape. It's possibly starting to roll over. Certainly Bitcoin has been coming under pressure, as we've been highlighting in recent videos. And elsewhere, if we look to the US, the Dow Jones Transport Index has rolled over, while other key cyclical parts of the equity market have come under pressure. Financials, for example, having made a new all-time high earlier this month, are now rolling over. Equally, energy also made a new local high in mid-Jan and has rolled over with financials. That weakness in cyclical sectors has of course been driven by lower bond yields. As you can see from this chart, the 10-year yield has fallen. That's the red line in the chart, and therefore cyclical sectors are selling off and underperforming defensive sectors. In other words, there's clearly some flight to safe haven assets. And along with those signs of risk aversion, market internals are reasonably poor. Have a look at breadth. It's rolled over, suggesting an increasingly large portion of US stocks are moving lower, with a smaller number of stocks holding up the index. That often occurs towards the end of a move higher and ahead of some give back in markets. So downward pressure in markets is building, and it's happening at a time of elevated complacency. You can see that in positioning. The CBOE put to call ratio is low. The scale on this chart is inverted, suggesting that portfolios are not well protected to the downside. They're vulnerable. And markets aren't just vulnerable to negative news flow, they often top on good news. And in particular, they often rally into and top on Fed announcements. So today's policy decision and press conference will be key. It'll be watched closely. They're unlikely, though, to surprise markets significantly to the upside, given the recently dovish comments we've had from Powell and Clarida and other Fed presidents in recent weeks. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading, join us on Twitter, LinkedIn and Facebook. Thanks for listening.